Here's an update for June 7th, 2023. The title, What Happened to the Market Crash? So we'll go over an S&P quick review from October of 2022 to today, some quick macro updates, a little bit on market psychology, and a simple explanation of why bull and bear trends end or reverse, and then a little bit on what happens next. Not financial advice. Do your own research. So a quick catch up for those that haven't been watching my other recent videos. This is the S&P 500. We're showing January of 2022, the top circle there, we hit 4,800. We then had a 28% drop over 10 months down to the S&P at 3,500. That was in October of 2022. A lot of participants were thinking we were going to go much lower into the 3,000 range, but they've been wrong. We've had a steady climb through a banking crisis up to today, and we're at 4,280. So a lot of bears are asking themselves and asking other people, what happened to the market crash? Everyone said a huge recession is coming. There was a lot of fear in the market. Most analysts were bearish. All of the CNBC headlines have been bearish, not only at the end of 2022, but even into the first few months of 2023 and up until even as recent as May. Now the market's been surprised. The bears have been caught off guard. So what happened here? I think it's useful to understand what might have happened and why October 2022 was the low. And then, of course, what's going to happen next? Have we topped at the 4,300 level, and are we going to dip back down, or do we go much higher very quickly from here? So both the bears and bulls are still asking themselves what's going to happen for the rest of 2023. So what happened to the market crash? Well, first of all, we did have a crash. We had a 28% drop from the high in 10 months. So we had a crash in terms of the amount, 28%, and the speed was fairly fast. Sentiment became extremely bearish due to the Fed rate hikes. So the second half of 2022 had both the Fed rate hike fears and inflation headlines scaring people. By October of 2022, it seems like all the bears had already sold. So anyone that had panicked was already out of the market. While we had all this headline fear, the economy held strong through the end of 2022 and into 2023. So job growth continued. Housing sales fell, but prices did not. Corporate earnings beat expectations, and consumer spending kept up. Inflation has fallen quickly. From 9.1% in June of 2022, it's been about 10 months, and we're at 4.9% and likely going closer to 4%. So while you had extreme fear added on with the banking crisis, you still had the core economy contradicting those fears, again with jobs, housing, corporate earnings, and consumer spending. So a quick one here on trading and market psychology. Bull markets end when the last bull stops buying. And of course, bear markets end when the last bear stops selling. So in October 2022, had the last bear sold? In hindsight, it looks like that's the case, that we did hit extreme fear, and anyone who was panicking got out of the market. Since then, people have either been waiting or they've been buying. So what happens next? Will we have a recession soon? Will the Fed stop raising rates? Will corporate earnings strengthen? What about jobs, housing, and the US dollar? Will we have a recession soon? Likely no. Jobs keep being created. It looks like corporate earnings are being revised upwards now. I think 60% of companies are raising expectations now. That's from Tom Lee at Fundstrat. So in the near term, meaning the next 3 to 6 months, it's more likely that we don't have a recession. Perhaps in Q1 of 2024, but notice the bears are suddenly talking about the recession coming next year, whereas it was supposed to be imminent and to happen any day. Now it's been pushed off for at least 6 months. Will the Fed stop raising rates? Likely yes. They're going to skip June, it looks like, and have no rate rises. Some of the banking crisis will tighten lending. We will have a tightening in the economy due to the very rapid Fed rate rises from 0 to 5% so quickly. But does this cause a recession? Probably not. And rates have probably topped around 5.5%. I don't think they're going up to 6%. Will corporate earnings strengthen? Well, it depends on consumer spending. And of course, if consumers have jobs and houses, they then spend on other things. So as long as the housing prices hold up and jobs hold up, you can be confident that Americans will keep spending. So likely no recession, rates have topped, corporate earnings will hold up, jobs and growth will at least hold its current levels. The housing supply is still tight. That's not going to change. And so it looks like house prices are actually holding or rising. And then the US dollar looks like it's topped out and it's going to weaken from here or hold the current levels at about 103. A weaker US dollar is good for global trade. It makes US products cheaper, and repatriated corporate profits are worth more when they're moved from foreign currencies into the US dollar. So this supports corporate earnings as well. What about a recession in Q1 of 2024? Yes, that's totally possible, and it could even happen before that. The question is, are things going to get better in the next 6 months or worse? And it looks like things are getting better. The economy will be able to absorb the higher rates. Job market will continue to grow. Supply chain will be even stronger by then. So there is a chance that we don't get a recession, and what we called a soft landing actually comes to happen. So wrapping up here, where does that leave us looking at the second half of 2023? Do we have the S&P go up to test all-time highs at 4,800? Case 2, do we grind along at the current levels, maybe 43 to 4,200? Or do we get a sell-off into that red square at the bottom of 3,000 to 3,500? My bet is we're going higher from here, that there's a lot of cash on the sidelines still, and a lot of the bears will be stubborn. In that case, the contrarian trade is to the upside, and traders will try to make money pushing up prices. It could be that we go up to 4,800 in the next couple months and then fall down by the end of the year. So we may hit 4,000 by December, but in the meantime, we've already gone up to test all-time highs. If you're still very cautious and concerned about the markets turning down, I think one sort of shortcut you can use is to look for sentiment to turn extremely bullish now. So if you start seeing financial news headlines talking about a new bull run, new all-time highs, and everyone out of cash and bonds, if that starts getting to be the dominant narrative, that's a sign that we may have topped, and that might be a time to pull back on some of your positions, maybe go back into cash. But we're still not there yet. We're still waiting for the bears to capitulate and the cash holdings to be moved back into to stocks and other risk-on assets. Remember that inflation is still there and it's not going away. And if you're holding cash, you're losing money by definition every year. So going into stocks, Bitcoin, crypto, other risk assets is the only way to defend yourself against a devaluation of your purchasing power through inflation. Thanks for listening. You can find me on Twitter at Gresham's Law 7.